Hello, good evening and welcome to Business Live. Coming up in this hour, President John Mahama downplays quick return to the international capital market, insisting the current strategy of exclusive domestic financing is getting the needed results.
We have survived without going to the capital markets. We've survived without borrowing. Who could have thought some years ago that Ghana's economy could be run without going to the external market to borrow?
We'll be analyzing these concerns shortly. Plus, President Mahama again declares the African Growth and Opportunity Act, AGWA, technically dead after the United States imposed fresh tariffs on African exports. Is it time for exporters to look elsewhere? We will be live with an exporter. Plus, third clinic of EcoBank Journeys Habitat Fair starts tomorrow at Good Park near Accra Mall. We will be joined by the General Manager in charge of sales and customer service at Multimedia Group Limited for what to expect. We have details of this and more coming your way all in a moment. Please stay. Grateful you could join me. I am Pius Kojobaka. This evening, President John Mahama is downplaying the quick return to the international capital market despite improved economic fortunes. The International Monetary Fund conditionalities and Ghana's challenging economic situation some years compelled the IMF to prevent the country from going to the international capital market to raise funds. Addressing journalists at the Jubilee House yesterday, the president noted that the current strategy is already getting the country some results, hence the need to tread cautiously.
Yes, we're quite happy with the outcomes of the reforms that we have been implementing in the economy. And we have survived without going to the capital markets. We've survived without borrowing. Who could have thought some years ago that Ghana's economy could be run without going to the external market to borrow? And yet, we've survived. And so we shouldn't be in a hurry to go back to the capital market. All we've done is to reorder our expenditure and push funds to areas that are of priority. And so that's all we've done. Fiscal discipline, not spending money on wasteful, political interventions and all that. And that is already showing the successes in the market. I mean, we've gone from negative 3.4% on the primary balance to positive 1.1 as at now. And by the end of the year, we'll achieve the target. I'm sure we'll overachieve the target, positive 1.5. And so it's all about discipline in expenditure. And so for me, as the president, I would not favor a quick return to the international capital market. I think we should go like this for a while and consolidate the economy before we look at external financing.
All right, let's have a conversation on the back of this. Yao Latte is a senior partner at Deloitte Ghana. He joins us via Zoom. Yao, thank you so much for making time to join us here on Business Live. And I guess the president is not far from right to have downplayed a quick return to the international capital market despite, the improved economic fortunes. You agree?
Cherish viewers and listeners as such. So yes, the president is right. The government has clearly indicated that there are ways of funding our expenditure and also supporting the budget without necessarily going to the international capital market. And obviously, if you want to put this in context, we did not just decide not to go to the international market. It was just not prudent for us to go to the international capital market because of certain factors. So the first one at the time was that the country was rated as the country with the highest or the second highest risk of default after El Salvador. That's 2022, middle of 2022. Ghana was second highest risk of default after El Salvador. So globally, Ghana was rated as very risky. Our Eurobond subscribers were asking for about 20% yield on our bonds, whereas some of the bonds we had contracted a year before, we contracted them about 8.8%. So Eurobond holders, those who are willing to subscribe to our bonds, were asking for about 20%. To the ordinary man, 20% interest on our bonds. These are euro or dollar denominated bonds. And so at the time, it was very difficult, and there were other factors. And if you compare them to today's trajectory, which is what the president's alluding to, at the time you went or we were taken out of the capital market, or we were priced out of the capital market, our gross reserves at the time was about 2.8 months of import cover. Today, our gross reserves is about 4.8 months of import cover. Inflation at the time was about 52.8%. Today, inflation is about 11.5%. Same GDP in the first half of the year is about 4.3%. At the time, GDP growth had tapered down significantly, and GDP growth was just about 3% or even under that. So there are a number of factors, and also added to that is the fact that local currency has appreciated by about 42% in the first half of the year. And so these are positive development that has helped the economy sustain itself without necessarily going to the international capital market. So yes, we support the president's statement that we should not rush to go to the capital market, and we can survive without necessarily going to the capital market. And at some point, it was more like a norm that every quarter we were going to the Euro bond market. Now, just to give you put things in context, the question is, at the time we were going to the Euro bond market, where were we putting some of these funds? Were we utilizing them in a way that increased the value of our GDP? So in 2022, when we were priced out or we could not go to the international capital market, if you look at our peers at the time, so Egypt had borrowed about $37.5 billion of Euro bonds. And that Euro bond as a percentage of their GDP was about 9.5%. Ghana had borrowed about 13.2 billion. And that Euro bond that we had borrowed was about 17.2% of our GDP. So we had borrowed so much, and we were the fourth to have borrowed across Africa, but the percentage of Euro bond that we had contracted to our GDP was the highest to see, because in other words, what we had done was that we had borrowed the money, but we had used some of the money to support recurrent expenditure. So if we are going to borrow even from the domestic market, we should have a way of profiling our debt and connecting them to expenditure that will increase the value of our GDP. If we go to international markets or even the local market to borrow, and we do not channel the fund to support things, capital expenditure, that will increase the value of our GDP. We will go around in circle, we will have this vicious cycle where we are borrowing, but it will get to a point where we are unable to service our debt, and we'll be priced out of the international capital market. So yes, the trajectory is good. We are on the right path. We are able to sustain our economy without necessarily going to the international capital market. But there are some risk in the economy, or some risk that we need to address. And if we don't address those challenges, we will have some difficulties going forward.
And I'll come to those challenges pretty soon. But for you, I appreciate the literature out, but what or when next, or when is the right time to go to the international capital market, when all the economic indicators are really showing signs of recovery? Inflation is trending downwards, policy rates going down as well. The cedi fairly stable until recently. We saw some depreciation.
Yeah, so like I said, there are a number of factors that priced us or got us some challenges, and it was not only in 2022, but even in 2015. It was still under the government that we have at the time. We went to the Euro bond. We could not contract. So none of our Euro bond subscribers subscribed to our Euro bond. So we have had challenges in the past. And so if you do not address the fundamental issues, the first one is to have a prudent debt management profile. And one good example is making sure that we have a sinking fund that's able to service our debt. So the government in the short to medium term, what the government is doing is that they want to return to the domestic bond market Now, by doing that, what they want to do is they are not only seeking the domestic bond holders, they are even looking at external bond subscribers who will still subscribe to bonds on our local markets that are denominated in USD. So one of the ways to mitigate any risk with that is to make sure your sinking fund is funded adequately with Forex. So if we do not fund our sinking fund as has been indicated in our budget, we are going to have challenge. So that's the first one. The second thing is also to ensure that we properly manage our local currency, because in 2022, our debt increased by 94 billion, not as a result of any additional debt we have contracted, but as a result of the depreciation of local currency by 52%. So if your local currency depreciates significantly, your debt to GDP will also increase, because what it means is that in local currency, your debt has increased, especially your foreign denominated debt will increase. So if we prudently manage our local currency, we would have some of the challenge that we had in the past. And also, lastly, what we are seeing is fiscal discipline. If we are prudently managing our expenditure, we will have instances where we go to the international capital market and we will borrow at a lower rate. And let me give you an example that at the time we were priced out of the international capital market, where our Euro bond subscribers were asking for 20%, Ivory Coast had gone to the international market and had borrowed at 8%. So if when we were borrowing at 20%, or we were at the time, our Euro bond subscribers were asking for 20%, Ivory Coast just next door, or our neighbors, would actually contract at 8%. So it means that without the fundamentals being right or getting them right, we will still have challenges.
All right. Senior partner at Deloitte Ghana, Yaolati, thank you so much for your input this very moment. I want to stay a while longer on the fallouts from that encounter yesterday the president had with the media. Well, the president, John Mahama, again declared the African Growth and Opportunity Act, AGWA, technically dead after the United States imposed fresh tariffs on African exports, including a 15% levy on Ghana's goods. Now, he made the remarks during his first presidential media encounter of his second term in office.
Nobody wins tariff wars. It's unfortunate that America has appended the whole world trade system. We all work towards a rules-based trading system. It took years of negotiation from Rio to Doha round and all that. And eventually, reasonable tariffs were agreed between countries. Countries like Africa enjoyed zero tariff into the US because we were in the developing world. And so it was a concession that the US gave. And what you receive in exchange is soft power that, you know, a lot of people have a good disposition towards the US because the US has been kind to Africa and all that kind of thing. But in comes President Trump. He has a more transactional mindset. And he says that the US has been taken for granted for a long time. And so even countries like Ghana in Africa, he slapped a 15% tariff on us from zero tariff. And so AGWA is technically dead. It was due for renegotiation in September. There's no way with this 15% tariff, AGWA is going to be renewed. But we're just watching carefully. The power to impose tariffs is that of Congress. But in this case, the US president always pushes the limits. And so there's a case in the US Supreme Court to determine whether his impositions of tariffs are legal or not. And so depending on what the US court says, the tariffs would either be permanent or they might have to go back to Congress to endorse the tariffs that he has imposed.
Away from the media encounter, the Commonwealth Enterprise and Investment Council has highlighted the crucial role a stable currency plays in fostering trade and investment within the economy. Chairman of the Commonwealth Enterprise and Investment Council, Lord Merland, tells Joy Business, maintaining a stable currency, government must create a more attractive environment for businesses and investors, ultimately contributing to sustainable economic development. He also spoke about government's 24-hour economy initiative.
A stable currency is the first step for doing that, and I think what the president announced yesterday is a very good and sensible and encouraging step. a stable currency allows people to invest against their own currency, knowing that if they put £1 in and it was the same value as is against the local currency it is today and as it is when it comes out, then that gives great confidence to outwards investment. This all is about establishing a framework that allows people to have the confidence to invest in a country, and that is what this 24-hour economy is about. I mean, a lot of countries are working on a 24-hour economy, but I think it's very exciting. Getting people back to work, getting people working is the only way that you can get productivity, obviously. Add that to investment and you get growth in the economy, and that's what your president's seeking to achieve, and I commend the government for trying to do that. It's a positive message. It has been very difficult getting people back to work across the world in a post-COVID era. The UK is suffering from huge problems in trying to do that, which I know firsthand. I know many other Commonwealth countries are having the same. So I think where you've set out the rules of engagement for employment and the encouraging people to work longer and harder and get back to work, then you will inevitably have productivity, and that means growth, and that means an opportunity for people to invest.
A reminder, you're still watching Business Live. We have more for you after this break. Hello again. Tell you what, the third clinic of the EcoBank Joy News Habitat Fair will start from tomorrow, Friday, September 12th, to Sunday, September 14th at Good Park near the Accra Mall. We have more for you in this report.
The fair is Ghana's biggest home and property event, which assembles all stakeholders in the housing industry. So, wherever you are on your housing journey, whether you are breaking ground, building up, or simply furnishing your space, the Joy News EcoBank Habitat Fair is designed with you in mind. Let's help turn your home ownership dream into a lived reality. The EcoBank Joy News Habitat Fair is powered by EcoBank, the Pan-African Bank, and brought to you by Drive EVGH, Drive into a Sustainable Future.
And once again, the fair starts from tomorrow all through till Sunday, September 17th, for all that you need to know in relation to the EcoBank Joy News Habitat Fair. Do well and stick and stay with us here on Joy News. We shall be bringing you more in our subsequent bulletins. Now, Chief of Staff Julius Deborah is calling for stronger support from the civil service to ensure the successful rollout of government's 24-hour economy policy. Speaking at the opening ceremony of a strategic interaction workshop for the policy, Mr. Deborah stressed that the initiative is central to driving economic growth and contributes actively to its implementation. More in this report.
At the opening ceremony of a strategic workshop in Accra, Chief of Staff Julius Deborah said government 24-hour economic policy is gaining momentum, hence the need for all sectors to push for its full implementation.
But let me emphasize from the onset that no matter how visionary a policy may be, its success rises or falls on the shoulders of the civil service. This is why the 24-hour requires not only political will, but also the steady hand of a professional, dedicated, and adaptive civil service. One, the civil service as the anchor of continuity. Unlike political leadership, which changes with electoral cycle, the civil service is the institutional memory of government.
Also present at the event was the Governor of the Bank of Ghana, Dr. Johnson Siama, who pledged the central bank's fall back into the initiative.
The Bank of Ghana stands ready to work with Parliament, with financial institutions, and with the 24-hour Secretariat to ensure that our financial sector is positioned to support these priorities. Colleagues, as we deliberate today, I want to urge that we focus on practical interventions that will make this program tangible.
Special advisor on the policy, Gusi Tano, said the 24-hour economy policy is a practical solution to youth unemployment and slow growth.
President Mahama has made it clear that the 24-hour economy is not a pilot, but a national mandate for all sectors. It will be judged not by reports or speeches, but by results. Jobs created, exports increased, productivity rising, and Ghanaians feeling the difference in their pocket and in their lives and in their cultural experiences as Ghanaians. Colleagues, this requires us to change our mindsets, to think not as administrators of narrow mandates, but as architects of national transformation.
The workshop brought together senior officials and stakeholders as government works to lay the groundwork for a seamless rollout of the 24-hour economic policy.
And you can visit myjoyonline.com/business for all the business stories you need to know in Ghana and beyond. I am Pius Kojobaka. That's it for Business Live for today.